Thank you. Thank you. Thank you very much. Let me get this. Kiana was very nice not to make a Georgia UGA joke, but if you're like me, you're wondering how did a UGA grad actually get invited to this forum, and I am, but it's a tremendous honor to be here. Have looked at the list of your impact speakers, and it's an extraordinary lineup of people who have come in the past and who are coming in the future. My own colleague, Baniman Hazarka, who's here today, said, you know, that's the same speaker series that my favorite author, John Nye, is speaking at in the film. I was like, who's John Nye? And he's like, oh, it's this incredible power of relationships thing. I was like, you know, this is why I surround myself with smarter people than me. But so it is really an extraordinary program at the Impact Series. Our own founder at Grey Ghost Ventures was a speaker here 2 or 3 years ago, Bob Batillo. So I'll share a little bit about him as we move through it as well. You know, the reason I guess a UGA grad could be invited to be here is because I've been extraordinarily lucky, and I've managed to stumble on an opportunity that not only brings the best of sort of what we know here in our society, in the U.S. society, but can really make a meaningful and significant impact in the lives of tens, maybe even hundreds of millions of people in the developing world. So I know that it's an interdisciplinary group here, management, engineers, architects, probably all combined. So what I'd like to do is give you a little overview on Grey Ghost, give a little bit of background on this space of impact investing, what does it mean, who's out there doing it, and then really drill down into some samples from our portfolio so you can see exactly like what's happened here, this outfit in Atlanta, Georgia that's managed to do some of this stuff on a global scale. Here's my shout out to Georgia Tech. I found the closest thing I could to gold in my PowerPoint slides. But this is our mantra here. Grey Ghost. Even a UGA grad, and there's some pretty big words here, but I'll just read it out and kind of meditate a little bit on it. Grey Ghost changes lives by investing in transformational entrepreneurial solutions. So I think what's important for you to note as I look at the impacts, the roster of speakers. You're going to have some great leaders from both the for-profit and the not-for-profit space. And I think Grey Ghost is very unique in a sense it presents a bit of a hybrid of the two. And I hope you'll see, how impact is the first and foremost reason we do the work that we do, but yet we're trying to bring the discipline of that for-profit mentality to it. So we are investing. I'm not talking to you today purely about philanthropy or making grants or giving things away. Those are an important part of helping others, but this is about how we can do that by investing. And we'll get into transformational and entrepreneurial, both words I'll come back to at some point. Before I go, I was reminded by the sponsors to ask, how many of you have cell phones? Show of hands, cell phones? Okay, good. Well, you can do whatever you want with your cell phones. The sponsors don't mind. But we will talk about cell phones a little bit in this presentation, so I just want to make sure you guys are familiar with them. But we'll chat. So, Invested for Impact. The title of the presentation is Investing for Impact. Invested for Impact. Let's talk a little bit about Grey Ghost and what we do and why we do it. Grey Ghost has 3 main pillars to the work that we do. We are seeking impact, and I can assure you that the 5 to 10 to now maybe 15 peers that we have in the industry, they almost all define it differently. It's something that is a very young industry, and some of the standards around what is successful impact, what is reaching others through an investment approach vary. We are fundamentally focused on the base of the economic pyramid. So, in other words, if 90% of the people in the world only comprise 10% of its wealth, you're looking at a huge sort of economic pyramid. And guess what? Almost all of us, well, all of us for sure, are at the very top of it. So how can we focus on changing lives at we actually like to call, it's a common acronym, the BOP, or the base of the economic pyramid. Our founder, Bob Patillo, I heard him coin once, bulk of the people. I thought that was great. It's really what we're talking about here is a huge population that is woefully underserved. Traditional corporations have not thought of them as a customer. And I think what I'd love to show for you today is a few examples where these people really are treated as a customer, and there's that relationship that's different. There's the dignity involved in that's different than just a donor, and a beneficiary type of relationship. So that's our first and foremost reason for being. We have, on the spectrum of people who are doing this work, you will find all range from those that would be happy to keep up with the pace of inflation on their with their investments, and those that are really seeking market-like returns. So there's a range of things that we do at Grey Ghost Ventures, and I'll give you a quick highlight of each of those. But I can say that we're focused on, particularly in the area I work in, which is early stage investment, we're focused on market rate returns. So I'm sure there'll be some Q&A as to what is a market rate return. I'm prepared for that question. But why is that important, though, I think is the fundamental issue. And again, it goes back to the whole idea of accountability and discipline of the for-profit, that expectation of an investment relationship as opposed to perhaps a donor and grantee relationship. So those are the fundamental drivers there. And the third pillar that we seek in our work is to be catalytic. Now, this can manifest itself in a variety of ways, but first and foremost, what we have found at Grey Ghost, and you'll learn a little bit about our timeline, and you'll realize we're very early in this space. And our founder, Bob, is very much the kind of guy. I remember at one point in time saying, look, I want to blaze a trail. I want people to know that it's okay to do this work. It's okay for others to come on in and maybe even put investment capital at risk in this. And he's always urged us to use our work to signal to others, maybe investors or large foundations or others, that it's okay. It's okay to jump in and try it. We're seeing this industry really go through maybe its first real growth phase. It was still kind of in its very nascency, its infancy before, and it's really starting to pick up a lot of momentum with people from all over the globe. So we can talk about some of that in the Q&A as well. Let's give a quick timeline on Grey Ghost Ventures. In the late 1990s, Bob, just to give you a background, Bob was an industrial developer. In the late 1990s, he began through a private family foundation to make grants supporting microfinance. This led him, he's a very entrepreneurial individual. He quickly grew tired of the confines of a U.S. foundation, which has a lot of restrictions about how you can use the money. And he began to invest into microfinance. So in the early 2000s, there were not other private, this was the domain of the World Bank and those other, hallowed institutions. There weren't just like private actors out there doing this work. So he was definitely the earliest of his kind out there. In 2006, we started the work that I've really been most involved in, and that is, we sort of got comfortable with microfinance. We got comfortable with the client of a microfinance bank, let's say, a person living on $2 to $4 a day, and we began to realize that these are valid customers. And then we thought, well, we know a little bit about technology, and we can see some of the gaps of what's out there. So what do we know about technology can we apply in these developing economies, emerging markets, and then even further still at the base of the economic strata in those countries. We've we'll talk, in the examples you'll see today are from that initiative. Since then, though, as I mentioned, our founder and the whole DNA of our group is very entrepreneurial, so we've never really slowed down. In 2007, we were lucky to come across a model where Bob, as I mentioned, was very entrepreneurial, wanting to invest, and at the same time was interested in education. And we came into to know about a sort of emerging investable education format. So in other words, in slums and other peri-urban areas of the developing world, the school system, the public school systems are very broken. If you think they're bad here, they're very broken there. And the alternative is very kind of ma and pa, where school proprietors are starting schools. And we simply said, look, we know a little bit about microfinance, and no one is looking at these school proprietors as entrepreneurs, but we could provide investment capital to them so they can add a new room and they can grow the school and serve more and more children. That's been a big part of our effort. In 2009, Bob and some of the team, I should say some of my team members are here. So when we get to Q&A, if you do end up having questions, I'll probably duck out of a few of them and let some of these guys answer. But we did start really under Bob's guise, a seed fund So our work is investing at the $500,000 level, let's say. No one's really investing at the $50,000 to $100,000 level in this space. So how do we figure out how we can service those entrepreneurs who need that very early capital to prove a concept or to get a little bit of learning about a technology? And that became our seed fund and incubator. And out of that, probably one of the more radical things that I think has been introduced into this impact investing stage is in 2010, that team devised a village capital model. And what they began to do was they began to crowdsource. The entrepreneurs themselves would come together and peer review some of the best, each of their business plans. So a cohort of 20 would come and peer review, and then they would tell us, okay, out of our 20, these 2 are the very best. And we would say, okay, you get to check. And it made it very compelling, very, the earnesty with which we began to learn about the businesses and the way the entrepreneurs would share with one another was pretty incredible. And that thing is taken off. Ross Baird is here, was a huge part of that, and he'll probably be able to answer some questions on the trajectory that it's on as well. But that's our history. A little bit of a quick snapshot. We have about $125 million committed to this work. That doesn't include the foundations that are still operating. You know, in the scheme of the world, that's a drop in the well, but it was certainly enough money to get us started and to really do some very interesting things. So just an overview of sort of the timeline of how we've deployed some of that capital. Couldn't come to Georgia Tech without a graph, right? But in any case, so here is really the issue, and you know what we began to challenge ourselves with is what role can technology play in you know, reaching vast underserved populations in the developing world. And there was a great quote we stumbled on, you know, which is those at the base of the economic pyramid, they can't join the global economy and benefit from it until they can connect to it. So we're fundamentally looking at how do we provide access for individuals and for others to participate in this way. And what I'd like to do is maybe move into a situation where we look at a few examples. And first example I have is a company named SourceTrace. This is a company from our portfolio. What you see in this picture is not related to SourceTrace, but this is the problem SourceTrace was solving. This is, believe it or not, this is a weekly repayments gathering of the leading microfinance institution in India, the number one. In fact, if you follow this space, listed on the stock exchanges in India. So it's an extraordinary accomplishment. And yet, look at the paper vouchers and you know the hard files, and this is the most efficient, you know, that you can get. So SourceTrace is trying to answer to this, and what I'd like to do, give you a little bit of an overview of their business. They are selling software to microfinance institutions, to banks, and others who are focused on that sort of remote connectivity. And let's just see a little video. This is one, we'll do a few videos today. Some will be more engaging for you than others. But Bloomberg Network picked up this company and the 2 entrepreneurs who founded this company. And let's just have a quick overview. Whoops.
A lot of these villagers, they're very proud to be part of the company. Even though they've never seen a computer in their life, when they see it, they have a very strong emotional bond to the technology, and they have a lot of pride that with the technology they will come out of poverty, they will be able to help themselves and their family live a better life.
The road of innovation is being paved out here in rural India. These farming villages are Sandeep Chatterjee's proving grounds. Chatterjee and banker companions are asking these women to take an act of faith for the first time in their lives, rather than hiding their money, to deposit it. Sandeep's company, SourceTrace, enables electronic banking over mobile phone networks. 3/4 of India's population lives in poverty, making less than $2 per day. While they may not have clean water to drink, most villages do have cell phone reception.
The technology that we have deployed here is allowing these women, who many of them are building small handicrafts, hand goods, and they're selling them on a daily basis. They're probably making 50 rupees, 100 rupees profit per day, which converts to about $1 to $2. And they're able to deposit the 50 to 100 rupees directly to the bank.
Multiply that $1 to $2 a day by hundreds of millions of people, that kind of money captures bank executives' attention.
Whether it is 100 rupees or
Sure it does. Let's see if we can get back to the presentation. So I think you get the point where the technology and the application we're looking at is not nanotech. It's simply saying, hey, there's an existing mobile phone network. They're POS devices. SourceTrace didn't invent either of those. How do we marry all of that up to the reality in the developing world to produce a meaningful solution to otherwise fairly intractable processes? Just to give you an idea, we can talk about this at the Q&A. I mean, these are, as I mentioned, fundamentally businesses. I'm not even, in this presentation period, I'm not going to talk greatly about the economics and the financials of these companies. I'm happy to in the Q&A. But just so that you're aware, I mean, this is a business that just brought in new investment. Some of the leading, George Soros' outfit came in, and other parties came into this investment round. And the trajectory for us is showing us of having doubled our money. Now, that's a paper gain. I'm aware of that. But just to show you that you can find models that create financial and social value. What would be the social value of this? Why would we be interested in this? And what I want to impress in you is that very different than the typical kind of nonprofit and foundation world where I give a 100,000 grant, I immediately expect beds the next day for 1,000 people in the hospital. This is a business that takes time, so you can make your initial investment, and there's so much of a foundation laying time period. So what we think about, and when we think about impact, is what's really going to be the impact at scale. So right now they may have, a couple million customers. What's really going to be, what am I looking for? And in this case, it's 2015. We fully hope that, SourceTrace will be serving 4.8 million either rural or previously unbanked customers. Now, why is that important? At about 3.7 transactions per month, so the picture, the gathering together, coming in from your other village to meet there, at 3.7 times a month on average, each time you conduct a paper transaction like that in person, the individual is having to spend about 39 cents. So this is just the Indian context. Imagine if at roughly 5 million customers, you eliminated that 39 cents per transaction cost. You'd be looking at something like $83 million back in people's pockets. And that's an extraordinary sum. If you divide that out, it's less than 20 bucks, which to you and me doesn't seem like that much. You'll probably hardly pay for the parking meter here. But, the reality is that's almost a half month's salary for these customers. It's easily 2 months worth of school fees at these private schools we mentioned earlier. So it really, if you're making $2 to $4 a day, that really adds up. And these are the little things that we look for. So our focus is try to help SourceTrace increase affordable access to finance. Let's talk about Cell Bazaars. The next one. Has anybody heard of Cell Bazaar? God, I know these guys have. Well, I told you we'd talk about cell phones, right? So here's Cell Bazaar again. Again, a quick overview of this company. This is a company that launched in Bangladesh. The reality is in Bangladesh, there's 3% of the population that has access to a personal computer. So if you want, to think about eBay or something like that, it's just not going to happen because people don't have computers. The founder of this company realized that with some very, very basic SMS technology and very easy user interface, he's able to essentially put up a classifieds system onto the mobile phone network. And what you'll see, now bear in mind, this is creating the marketplace where previously people couldn't connect. So I'll show a quick video. It doesn't have as catchy of music, and it doesn't have any music, but it's a pretty powerful overview of what this company offers, and it's just a little story to follow, a little vignette. This is from their website. Yeah, you have to read it. Sorry. We should have like Jeopardy music playing right now. So that's the key point. No selling power. Yeah, okay, great. So I think, without any words whatsoever, you got the message right on that one. That's a pretty powerful marketplace that's created. And as I mentioned, this is a classified, so they don't track and they don't capture the actual financial transaction if there's a sale that happens. But we did sell this. We actually had what a venture capitalist would call an exit, which means we sold this company in an acquisition. A multinational mobile network operator purchased this company for roughly about a little less than 5 times the invested capital. When we sold it in early part of 2010, it had 326 million page views. Now imagine the country is 160 million people in Bangladesh, and there's about a little over 40% of them have a mobile subscription, so they have a mobile phone number. Isn't that 67 million? If you imagine, that's as if saying every single person with a mobile phone number had looked at Cell Bazaar no less than 5 times. It's an extraordinary fact. And the reality is there were only 11 million, there were 11 million active users when the company was acquired. So this was clearly, and we can talk about more examples of this company, it was very much sort of award-winning enterprise, if you will, on how to use the mobile phone to enhance the lives of the poorest and to empower them. So this is really creating access to markets and information in a massive scale. Let's look at a few more vignettes if I can get, there we go. So what we have now is a business name, Movirtu. And again, I know I'm only giving you a bit, so I'm happy to take all the questions you want to ask. But Movirtu is a company that, a little bit of a different idea. What they did is they said, look, the single biggest barrier to cell phone access, if you believe that I can sell the fruits by the phone, or if you believe that I can, lower my cost to doing business banking or others through the phone, well, the single biggest barrier to having a mobile phone number is the fact for the poor, a $40 handset or even a $25 handset is a barrier to entry. They just can't find the money to pay for that. They can pay for $3 or $5 worth of prepaid air credit, or something for services, but they can't almost always afford to buy the handset. And this company just looked at that fact and said, well, hey, how many of you are GRAs here or want to be a GRA at some point? A few hands go up, You probably don't have your own designated computer here at Georgia Tech, do you? You probably share with the other GRAs. And I imagine you come in and you log on to your username and password, and at the computer you have your email and you have your documents and this sort of thing. Well, this entrepreneur said, hey, we can do the same thing with a phone. With a simple PIN code, we could all of a sudden, turn this phone into just a sort of terminal, almost a cloud phone. And we can eliminate the need for people, the poorest in the world, to actually have to buy a handset. They simply can borrow a phone, punch in their code, and then they have their voice messages, their text messages, their missed calls. They can see, and they have a number that's designated for them. Now, the business model works because previously what they would do is they would ask to borrow a phone. It wouldn't have a number that was theirs. It would be somebody else's number, but they could use it to make a call. But they would also have to pay a markup, for the use of the phone and for the minutes. What this entrepreneur has devised is a way that if I share my phone with you, I get airtime credit. So the next time I need to either pay my bill or top up my account, I'm already going to see a credit for the services that you used while borrowing my phone. So it builds that. And what's nice is also if I borrowed your phone, instead of paying that markup, I'm all of a sudden getting access to the mobile telephony, all the services, at the lowest rates that the carrier will provide. So, you immediately start to see some impacts for individuals. This video I have is kind of interesting. The video we wanted to show you guys is a pretty interesting video. It shows kind of the whole way this works. But it mentions a major mobile network operator in it. And the actual release of all the marketing shebang is Valentine's Day, next Monday, February 14th. So they said, Brian, sorry, we can't let you show this video. So I'm going to show you another video. What you'll see in here, though, is the reality of how people at the base of the economic pyramid have to use a phone, particularly if they don't have one. You'll see some community phones and others in here. So let's just take a quick peek at this. This has music, but no words. So varying degrees of... These are the like the kiosks where you can go make phone calls. This is Umbrella Man. Usually there's an umbrella there. They call it the Umbrella Man. So again, you know, what's the impact of that, right? Like, why is that important? Well, I mean, I think we kind of get it, but when we made this investment, what we thought was, look, the thing that happens, and it happens here as well. I mean, if you're at home at night and you get a call at 8:30 at night, and they say, look, if you're a casual day laborer or something, they say, look, be ready. I'm coming by with a truck at 7:30 tomorrow. If you miss that call, and you're in this context of where you just saw the pictures, there's no other job for you. Like, you missed a day's worth of work. And it may not seem like such a big thing to us, but you know, we don't know exactly how often that happens, but let's just suppose it happens 10 times in a year. I'm sure it happens actually a lot more than that, where I just didn't have a phone number and the community phone wasn't available, and I missed that call. I didn't get that job that day. So I've lost a day's worth of income. You know, this is 2.9 billion over the subscriber base that Movirtu hopes to achieve. Again, this number's at 2015, so you're extrapolating down from about 4 billion people to a very small subset, which they think they can reach based on their partnerships. You know, this is 2.9 billion in increased household income, you know, to people. That's a pretty extraordinary accomplishment if people, just the simple one element of this innovation. So let's let's move from there to a different hemisphere. We'll talk a little bit about Paralife. Paralife is interesting. It shows the evolution of our work. This was an investment we made in 2006. So this was, if you recall, we were just thinking like, what's out there besides microfinance that we can use these resources for and help people's lives. Paralife came to us, and it is a business that offers micro insurance products. So imagine life insurance, but in the value of $5,000 or $10,000. Now, a lot of you are college and graduate school level. You're not really thinking about life insurance, but some of you are, I know, and have. That doesn't seem like a lot of life insurance here, but again, given the salaries and the earnings potential of people at the low-income segments of society, that's a fairly incredible amount of capital that serves to smooth the financial stress if someone in a household passes away or something. This company's also done some incredibly innovative stuff with its distribution. So how does it get people to sign up on these for these products? And I should mention, the average policy, this company is operating in Mexico and Colombia currently. The average policy was $7 for annual premium. And that was, on average, providing about $3,000 of life insurance. So those are numbers that just don't make sense to us. I think you would agree. Where they've really been innovative is they've partnered with groups like supermarkets and have people at the checkout register promoting the life insurance. This is my favorite one, is they've partnered with pawn shops. Pawn shops kind of have a seedy reputation here, right? You know, but they're the oldest financial institution, in fact, in Mexico, is right on the square in the Zocalo in Mexico City, and it's a 500-year-old financial institution. It's essentially a pawn shop, and it's called Mountain of Faith or Monte de Piedad. So Paralife, you guys won't like the video I have for it so much. It was a couple years dated, and it's kind of a promotional video. But let's have a look real quick at sort of the realities there and see what we get. I think I'm supposed to advance this a little bit. Okay, so this should be Mexico City. Okay. Here, let me open that up.
In these fast times, big changes and dynamics in our social and economic environment affect us day by day. This should give us cause for some important reflections. How can we provide help to those who are less fortunate, or to those who are the most vulnerable around us? This is where the vision and creativity of two men, Rolf Hüppi and Gabriel Monterrubio, provide a solution. The Paralife Movement, an initiative that exclusively focuses on the idea of offering micro life insurance to people in the low-income and underprivileged sectors, as well as to people who suffer from some kind of disability. Paralife has created a unique business model with the objective of contributing to the financial stability and thus improving the lives of people in the low-income and other underprivileged sectors, of micro-entrepreneurs, and especially also of people with disabilities.
Okay, so I think one of the, again, what's the real impact of this? I should mention that at scale, and I think for this company that's in 2017, they're hoping that they'll sell 3.4 million policies in South America, both including Mexico and Latin America. So if the average policy is $3,000, because there's a range of products they offer, and I can tell you a little bit about that in the Q&A. But this is putting $10.2 billion of safety net, into the social fabric of the low-income segments in those countries. So it's it's a vast sum that's just not there. Government doesn't offer this. It's just not available. People don't have like retirement they can tap into and that sort of thing. So really, this is a pretty powerful way to sort of smooth the stresses of life in those communities. Just move to a little different model here. As I mentioned, we would talk a little bit about the cell phone, and we did that. We can talk. I brought the box and not the lantern, because if the lantern's sitting in my office, it's not charged by the sun, and I don't want it to not work for you guys and disappoint the Georgia Tech, engineers that we have here. But there's a company named D-Light Designs. What D-Light sells, they were the forerunner and remain the preeminent solar LED lantern company in the world, really, but particularly for the ultra affordable category. So this company was founded by a guy whose background is not dissimilar to mine. He was a Peace Corps volunteer. When he was serving in the Peace Corps, his host brother was napping in the hut in West Africa and accidentally kicked over the kerosene lantern. That lantern then caught the hut on fire and severely burned his host brother, scarring him for life. And Sam Goldman, the founder of this company, essentially returned, went to Stanford Business School after the Peace Corps, and thought to himself, I'd like to exterminate the kerosene lantern. I don't want, that's his mission. And so he and some very bright minds across multidisciplinary group at Stanford created these initial solar lanterns and branded it as D-Light Designs. This lantern here sells for about $10 in India. In fact, I bought mine there and wanted to make sure that I was sort of at the end of the distribution chain, like in the very last village that I could get to, and see how far these lanterns have penetrated. And it's an extraordinary thing. $10 seems like nothing for us. I mean, like I said, my parking meter will probably be more expensive today. But to someone in these villages, if 30 people are gathered around, and I saw this with my own eyes, like there's not one of them that thinks I couldn't use that, right? I mean, because as you may know, 6 o'clock in the tropics is when it gets dark, and it's a 12-hour and 12-hour thing right around the equator. And so people from 6 to 10, if you're off of the electricity grid, you don't really, I mean, you know, you have candles and you have kerosene lanterns. You don't have electricity. You don't have, like, you just don't turn the lights on in your house. So this is something that I think everyone standing there clearly wants. I mean, and yet still $10 is almost too much money. So the company, you know, if there are 30 guys there or people there, then probably 1 or 2 of them could afford to pay cash at that time and buy it. It's actually a little bit heart-wrenching. Yet the company's got some innovative models on how people can pay down progressively against the cost of their lanterns. But in any event, let's watch their impact video, and you'll see they've really gone a long way to try to quantify a range of impacts, not just economic. So a lot of food for thought for Q&A, but also we can come back to kind of our own small, more narrow impact statement and see where that gets us. Okay, this one I actually have a play button, and this has music also. So I think that is dated as of October, November last year. You know, again, just to kind of put it in the context of the things we track, if in fact 50 million lives have been impacted by this, and per life there's a $32.40 productivity gain. So this is because shopkeepers can stay open from 6 to 10, whereas otherwise they would be, you know, either lighting candles or maybe staying open somehow, but they wouldn't have clean white light, you know, in their premises. Or they could get up, you know, an hour before dawn if they needed to, and get some businesses. So that's an annual productivity gain, and that translates into, you know, again at 2015, $1.6 billion in increased household earnings. So that's money coming back to kiosk owners and small shopkeepers in the developing world. So I want to be mindful of the time. This is to just show a few resources that are out there. If you wanted to learn more about this space, as I mentioned, it's exploding, and there's a lot of great stuff happening. GIN is a network. It's called the Global Impact Investors Network. You can go there and get updates on kind of what are the new models. They'll interview the different investors to see where these folks are thinking. There's a B Corp, which is a movement to sort of certify these businesses around their social, environmental, and financial objectives, all synchronizing those up. There's a lot of stuff. This is just the tip of the iceberg. The hub is here in Atlanta. It's a great resource for anybody that's got an opportunity to head on over there. It's on Spring Street and 17th, if you haven't been there yet. So with that, I'd love to open it up to Q&A. But I hope that you see that the work we're trying to do is to really empower individuals, you know, to build things themselves, to build and transform their own lives. We just want to put the tools out there and see how people take advantage of it. We never know how people are going to use the mobile phone, and they're incredibly creative, and I think you've seen hopefully a little bit of that. So I think we have time for some Q&A if there are questions. So.
I'll ask the first question. That is, you set it up earlier in your discussion. Okay, what is your market rate of return?
I knew Alan would ask that. He's a plant. So in the venture capital industry, you would see funds, depending on what year they raise their capital, you'd see them trying to return 2 or 3 times the money they take from their investors back. So if you double your money, you're earning 20-25% return. And I think we expect these portfolios to do about that. I can give a little rundown on some of those portfolios, how much we've invested, where we've seen new investors come in at what price points, so we see the value creation on the financial side. And across the board there, it's tracking at around 2 times our investment. So we're seeing that trend play out.
So despite the social purpose, you still have in mind a very specific rate of return for these investments that need to make sense.
Well, we don't look at it as like a hurdle rate, like if it doesn't do this, we can't invest in it. But we feel like we're finding stuff that's so powerful that you could put, and the market is so huge, and it's for such a long time been so disregarded that we feel like if we get it right, and we won't get it right all the time, but on a portfolio basis, we should see that the value is created, both the social value and the financial value. So.
What's going on to provide more affordable cell phones and more affordable ways of powering the batteries?
Mm-hmm. Well, they're trying to get cheaper and cheaper cell phones, and I've never seen the actual handset, but I've read that there's a $20 handset. What we find, though, in the context of, let's say, Africa or parts of Asia, if you've traveled there, you'll know it's an extremely rugged place and often very dusty, and cell phones that are made cheap, there's certain components that have to go into the phone, and you just can't get around the cost base of some of those. So we're mildly concerned about the lowering cost of handsets, but it's never going to be, it's always going to be a decision factor for the poor. What we've seen as far as lowering, because it's a very good question, why we were interested in Delight initially, I forgot to mention it charges a cell phone. I should have mentioned that, as well as a little output on there. But why we were interested initially was just sort of that overlap of, okay, we're watching mobile phone as a platform and a tool, but yet we know we're off grid. We know people can't just plug their phones in. So what are they going to do, and what else is out there? And we stumbled on, it's no kind of maybe a no-brainer, but a few years back, this whole idea of generating energy in a very distributed fashion, so not in the central power plant like we're used to here in the industrialized world. So what you're seeing on handsets specifically, there's a very cool business out of the Netherlands, which it probably has the leading solar battery. So they've got a technology which steps up the rate at which the little solar cell will convert the electricity, and that's just that alone is helpful in sort of the charge requirements to get the cell phones up. Now, charging your iPhone is going to be a little hard. That thing's an energy hog. But these basic handsets can do quite well, and that's been launched. It's working in Kenya and India as well.
Well, I can just project. Do you invest in American companies working in these markets? And then what are your investment ranges?
Okay, great.
And your term, the terms?
Well, terms will be a long discussion, but we can go there. We do invest. You'd be amazed. And this is something of a differentiating factor for us. And while we've been woefully neglectful of really being, a good resource for Georgia Tech, we've been fortunate to have good relations at MIT and Stanford and other schools where a lot of this is like the Delight. These were guys that came out of school here in the States. It's a U.S. company. We invest in a U.S. company. All the operations are in emerging markets. And that's the common trend that we see across our portfolio. And in a large degree differentiates us from folks. If we were trying to be only in India and competing against local venture capitalists in India, I think we'd probably, be handed our hats. So it's a pretty unique differentiating factor for us. By way of any that are operating in the U.S., if there's time, I can give you an example of an Atlanta-based company. It's the only company that we invested in that has operations here in the U.S., and I'm proud to say that it also was acquired, and it's serving exactly the purposes of why we invest. We can go there, but all of the others are operating in emerging economies. So we focus mostly on South Asia, Some of our companies are scaling into the African markets. It's a very hot space right now. It's the energy level, you can just feel it, particularly in parts of East Africa. And South America, obviously, in Latin America, being here in this hemisphere, we have a network there. Terms and size and amounts, the investments, the smallest investment out of all the 5 you saw, the initial investment was $250,000. We have now, in each of those companies, Source Trace, we have 1.5 million. We have about 1.2 million in Movir 2, about 1.5 in Delight. So as they grow, we want to be there to provide additional capital for them. And so when we make the initial investment, we budget for our participation at the next rounds. So the average is around $700,000 probably, depending on the stage and how many rounds of investment have come. And lastly, she asked almost all the questions I know how to answer. The terms, I mean, one of the things we try to do is say, look, if we want to say you can do this, like you can invest and you can help people's lives, but you do it on commercial terms, well, then we have to copy what the commercial guys are doing, right? Like we have to do what they do. So if you were to look at our terms, and the way we invest, it'd be very similar to sort of early stage venture capital, let's say in Silicon Valley here in the States. So kind of a preferred stock, and there's all range of different variables. But we want to be, again, as close to what the market's doing as possible, because we want to demonstrate to others that you can put your capital here. Delight's an interesting story, just to put a little exclamation point on that. The syndicate of investors there includes purely commercial actors along with purely socially minded actors in the investor syndicate. So it's quite exciting to see those guys coming at the world with very different perspectives kind of meet around the table to advance the cause of something like Delight. So. We expect holding period. These aren't the kinds of things where it's like, okay, 3 years and give us our money back. We're equity, holders, so we're partners, if you will. We expect to hold these investments for 7 to 8 years. A VC would like to tell you that they want to get out in 3 years or 4 years. That's just not happening. It's not happening here in the States. It's not happening largely overseas either. So, as I mentioned, it takes a long time for these guys to, a year, 18 months, 2 years, just to get to the commercialization mode. So it's a long-term business. Yes, ma'am.
I was wondering, when it comes to microfinancing, how can you be sure that the loans are actually used to start businesses and that they are not used for something else?
I think we have some microfinance experts here. I see this guy back there with long hair. I am not a microfinance guru. I get it by osmosis. I think that I don't know that there's any guarantee, but I do know that some microfinance institutions are better at evaluating the credit purpose and checking, as they make the visits, to see how the enterprises are doing, actually seeing that the refrigerator was purchased, so. But you're right, money is fungible, and I don't know, is there a better answer? A colleague of mine, Steve Hardgraves out there, used to run a microfinance institution.
Just essentially what you said, it's very difficult to verify because of what Brian described. You can take the money and initially put it in the business and then take those days of earnings and pull them right out of the business into your personal needs. So it's one of the great challenges of microfinance.
Good question. Thank you. Thank you, Steve. Yes, sir.
You said it takes about 7 or 8 years for you to see a return. How much of that is the acceptance of the product into the market, the people getting the trust, I guess, of these people, especially with that mobile network that you said too?
Mm-hmm.
How does that trader know that he's getting a good deal? How long does it take for that to accrue? And then do you ever have any products that seem like good ideas, but just fizzle out and don't get accepted by the market?
Oh, well, see, I only showed you 5, right? And none of those are in that batch. But you're absolutely right. Question is, if it takes 7 or 8 years to, quote, harvest your returns, what's happening in that time period? And, the typical venture capital model would say if you invest in 10 businesses, you might see 7 of those go flaming and, down the drain. You might see a couple of them, in the U.S. baseball analogy, make, like an on-base hit. But you better have one of them that's a grand slam. You know, we think we're very fortunate because what we're trying to do, we have this huge population that's been almost completely bereft of meaningful products. And we have a particular focus on the affordability for those products for them. We expect in a portfolio basis to see, you know, maybe half of ours just be written off. So we won't get any return. There won't be any 7 or 8 years. And it doesn't take that long. It takes, you know, a lot less time to get there. But we'll probably expect more on-base hits, and we might even get a home run or two. Whether we're going to be in a grand slam, you know, I don't know. Time will tell. But our profile we expect it to be a little different, and we feel like the portfolio is tracking that way. Bob Attillo, our founding investor, he reminds me frequently that I can't believe you still have all these portfolio companies, and they're still doing something in the world. Because, you know, his expectation was most all of these should have already closed their doors. So it's a very interesting question, and will invite me back in 5 years, and we'll get to tally on that. But it's a good way, the way you had it thinking about it is appropriate. So.
I have 2 questions.
Yes, ma'am.
Unrelated to each other. One is, what is the minimum investment that a person would have to make if they wanted to invest? And the second question to that is, are you having them invest in a particular company or in a portfolio, like you just said? And then, from not the context of business failure, but in the context of making an investment in a company here, the venture capitalists usually want an exit strategy.
Yeah, well, we want an exit strategy too. Well, so let's talk exit. It would be foolish to say that we're not thinking about that from the moment we get something by the email or a friend calls and says you should talk to these guys. It's always a factor. I don't know any venture capitalist that can guarantee what the exit's going to be. You know, in fact, these businesses morph a bit as they evolve. You know, we try to play a governance role so we can keep them on the trajectory, committed to the social impact as well as the financial. But we have no guarantees. They have to perform. They have to perform in their markets. If we believe if they perform, most all of these companies will be bought. We don't put a lot of credence in like an IPO on the stock exchange. Although there's 7,000 publicly listed companies in India alone. There's 32 some odd stock exchanges in that country. Like, who would imagine? They're not all like the New York Stock Exchange, but they're functioning and it's a public market. I think we're going to find that stuff we're doing is going to be attractive to groups like the Ciscos of the world, the Oracles of the world, the SAPs of the world, that kind of thing, because they don't know how to get down to this customer base. And we're finding entrepreneurs bringing it up sort of organically. So we're always thinking about exit. And we need to feel comfortable that we understand and see how the exit could potentially work. And it can't be that we don't have that vision also. As regards the investments, so there are some angel networks that are blossoming. I should have put that up. There's one group that is a pun on gin, and its name is Tonic with a double I. And Tonic is an angel network that's only focused on impact investments. And you know, I don't know exactly the inner workings of Tonic, but I would suspect that, you know, members are pre-screened based on their credentials. And then probably they have to make a commitment to invest $25,000 or $50,000 a year. And there's no, you know, they probably get the opportunity to see 15 opportunities, investment opportunities, and then they select, you know, what they feel comfortable with. And I'm sure there's some gray area. But that's how a lot of these angel networks work. Another group is the Investors Circle, which is also focused, and has been for a long time focused, but largely domestically, on you know, these sort of double and triple bottom line enterprises. So those are opportunities for individual investors.
I have a question.
Yes, you've mentioned university relationships. How else are you identifying entrepreneurs and opportunities?
So we at Grey Ghost have been incredibly fortunate. A lot of it is reputation. You would be amazed, but with the early, you know, you saw the timeline. The activity has really picked up in this space in 08, I mean, if I had 10 of my peers up here on the stage with me, I doubt you'd see anyone that had made this type of an investment any earlier than '08, most of them in '09 and 2010. So the fact that we've had this track record, the entrepreneurs talk. I mean, the good entrepreneur talks to other entrepreneurs and knows, like, they ask, like, can we talk to your portfolio companies? And so they have a way of kind of finding it. And I would have said, I do say still that we get one of the earliest phone calls from the best entrepreneurs, because all the work we did in microfinance, the reputation we have, the great colleagues I've been fortunate to work with, that I would say, though, as more and more competition comes, people want to create, they want to do this. They want to find ways they can plug in and do good, but also live by their values. And I think we're going to have more competition, and we'll just have to keep doing great stuff. And I mean, I think the good news is we know almost all the investor groups, and so we can kind of we can follow, hey, are you looking at what are you, that kind of thing. But it's a good question. We have to stay vigilant. We go, we speak, we judge competitions, all kinds of things. When we travel, we try to meet folks. It's a good question.
You have a question?
How much time is spent educating, and how much money is spent educating the marketplace in these countries?
That's a phenomenal question. I just want to, if y'all were taking notes, if there are teachers in here, ask that question on the exam. The Paralife is the perfect example where, here you had the stars aligned, right, where you had this guy who'd been the CEO of Zurich Financial and Insurance, so he knew insurance. There's probably maybe 2 people on the planet that could pull off this business at that point in time, and all the right, technology, the right local team. And yet what that business found was an inordinate amount of education to the customer of what is life insurance. They were never offered life insurance. Why would they know that? I mean, D-Light's a little easier. You hold this lantern up, turn the light on, it's 7 p.m. at night, and it's dark, and people are like, I got it. But the other things take time. Same as the village, the mobile phone, it's just, can become a cloud phone. That takes some education. I think that's the single biggest kind of obstacle to the growth and the trajectory of these very young enterprises. It's a very good question.
Oh, I remember. I think Marcia's question before was, can people invest in Grey Ghost, or is that just Papatelos money? And if you can invest, what's the minimum?
It's interesting you ask. You could invest, but it's probably not, there's a whole bunch of things about fundraising and SEC laws and this sort, so I probably, shouldn't go into that. If you'd like, we can talk about it afterwards for sure.
No, I think she would, though.
Okay, well, we could chat. I just would be a little bit uncomfortable.
So it's possible if you qualify.
Well, so our goal is, in keeping with our goal of being catalytic, the nice thing is we're at a point right now where we're looking to say, okay, maybe folks would want to join up in with our work. The current, quote, fund is a partnership structure, so we have, a Netherlands-based partner that's not just Bob's money, that's working with us.